venture capital is one of the funding sources that is available for businesses. But in Africa, this same venture capital is rather underutilized, or should I say, mostly inaccessible by businesses in Africa. Why is this so? It is simple. Most investors in Africa, or most venture capitalists in Africa, are rather more interested in buying stock or buying shares of large corporations, that is, businesses that are publicly traded in either the Nigerian stock exchange or whichever stock exchange around Africa. They don't have they have zero or no interest in investing in startups or businesses that are still private limited liability companies. So in this video or in this section, I want us to, as a business person, as an entrepreneur, we're going to be looking at practical things that these venture capitalists are looking out for when they are considering investing in a particular business. And also, we're going to be looking at how do you, as a business person, position yourself or position your business to attract these venture capitalists, or what we call angel what investors in your business. So work with me, because as a business person, as an entrepreneur, I'm going to be sharing these tips, how it has worked out for me and how it can also work out for you as an entrepreneur or as a founder. But before we proceed, let me welcome you to the stress-free money zone. Here we promote tips and habits that can enable one to live a financially stress-free life. So I'm going to be sharing with us 4 things that venture capitalists look out for when investing, when trying to pick an investment option. Number one of them is a team. Is a team. They tend to look at who is actually driving this business. How passionate is him or her about the business? And they also look at the entirety of the team. That is the general nature of the team. Who and who is made up of this team? Are they people who can actually drive the vision of this company? Then again, also they look at the addressable market and the growth potential of the business. So what is the addressable market? How big is the addressable market that this business is going to be serving? Because from there, they can be able to understand if at all this business or this enterprise has a growth potential, has a potential for growth in the future. Then thirdly, they also look at the financial record of this business. What is the financial, what is the numbers like? Because that is what will determine how much they are going to be making from this investment in the long term, either in the long term or in the short term. So they also look at the numbers, which is the financials of the business. Then lastly, they also look at the exit strategy. What is the exit strategy for this business? When the business is, let's say the business is winding up or closing down, what is the exit strategy? Are they going to be able to, what happens to their investment at that very particular point? How do you now attract this venture capitalist to your business? First of all, you need to have a registered business. You need to ensure that your business is duly formalized. That is, and if you're operating, say, in Nigeria, you need to be able to ensure that this business is registered as a limited liability company, or LLC. That is what enables you to be able to attract shareholders or have shareholders into your business. Then again, you need to ensure that your business idea is scalable. It is something scalable, because investors are looking at businesses that have the potential of growing, say, times 10 in the next few years. So you need to ensure that the addressable market for your business is quite what large. That is, there is a market in your addressable market. Then again, you need to ensure you have a strong team. You need to ensure you have a strong team for your business. You need to be able to assemble a team. Let it not just be a one-man business. Because imagine, put yourself in the investor's shoe and you want to invest in a business, and that business is a business that is just owned by one man. There is every tendency that there is no check and balances. The person can decide to mismanage the funds and all of that. But having staffs, having people in your team is a way of structuring your company in such a way that it is formidable. There is check and balances. There are different people handling different positions. So you need to be able to engage people, bring people on board as team members if you are looking at attracting venture capitalists into your business. Okay, so thirdly, attracting investors into your business requires that you are able to, show traction, show momentum of your business. What have your business been able to achieve in the past years? You should also be able to start something. Investors are likely to invest in already existing businesses than startup. So instead of waiting till you get funding, be able to start something. Prove that your business is workable. Have users of your product. All these things are things that makes up your traction. That proves that your business is scalable and achievable. And also, you should be able to know your numbers. That is number 4. You should be able to know your numbers. They measure your unit economics. You should be able to know your market size. You should be able to know your growth metrics. You should be able to know your financial projections. What are you going to use this money to do when this money comes? What is the net profit of your business as at today? All these things, you should be able to speak confidently about the numbers of your business when interacting with venture capitalists. Remember, the passion you put into your business is one of the things that can convince a venture capitalist that you know what you are doing. You are worthy of being invested on or invested in. Then number 5, you need to be able to craft a compelling pitch deck or business plan, and also business plan for your business. Remember, you should be able to, your business plan or your pitch deck should be able to tell a story about your business. You should be able to, it should be detailed. You should ensure that your business plan is well crafted and concise. Then in conclusion, you should also be able to build quality relationship, because venture capitalists mostly it's a kind of, should I say, somehow, or should I say, a little bit of emotional investment. Why did I say so? It is because whoever that is invested buying shares of your business, especially being a startup or especially being a private business, is first of all convinced with you as a person. Let me just put it simple. The person must actually like you as a person, as a business leader, before even deciding to buy shares in your business. So you should be someone who values their integrity, someone who knows how to build relationship, someone who is interested in investing in their personal branding, because this is the one of the major key things that can be able to attract investors to you. So as an entrepreneur or founder, venture capital funding is one of the ways you can actually be looking out to be able to fund your business. And if you are able to position yourself, position your business in the right direction, in the right manner, you will definitely be able to attract shareholders to invest in your business. This brings us to the end of today's section. In our next section, we are going to be looking at 10 things that motivational speakers will not tell you about business. We're going to be looking at more like 10 secrets that motivational speakers will not tell you about starting a business. So don't forget to subscribe to our channel so that when this video is being dropped, you will get a notification immediately. And again, if you have enjoyed this video so far, don't forget to like. The comment section is always open for our interaction, your questions and all that. And also do well to share this video to those that would definitely need it. I still remain your host, Chisom E. Anolefo, aka Mr. Investment. Thank you very much for staying tuned and see you next time. Bye.